What's going on, everybody? Hope you're having a good day so far. Today's video is going to be about indicators, so it's more of an educational video, and the indicators that I personally use to scalp options. So one of the things that I've learned is that less is more. So when I first started trading, I would go to YouTube, go to the internet, look up what all these different indicators are. So the RSI, the MACD, the stochastic, and then I've learned from the stock hours team that honestly, the less you have on your chart, the better, because you can focus on the actual price action and not what the indicators are telling you to do. So as a scalper, in my opinion, you shouldn't have like 100 indicators on your screen. Just these couple indicators that I'm going to talk about can definitely boost up your trading a lot and help you learn how to actually trade off of price action and not what these lagging indicators are telling you. So the very first indicator I want to talk about is one of the most important ones, and that's volume. So the reason volume is very important as a scalper is because let's say you're playing a big key level breakout and you don't have volume. A lot of times you can reject off of that key level, or it can be a false breakout, so you can get caught in a wick and then end up taking a stop loss. But now when you have a lot of volume behind that setup, a lot of times you're gonna get continuation through that breakout, and the actual break of the key level will happen, as long as some other things are lining up with it. But volume is a very important one. So when we're scalping, a lot of times we're trading very close to the open. So the first 30 minutes, the first hour and a half. And the reason for that is because the volume in the right off open is usually the highest throughout the whole day. So when you're taking a trade at 1 o'clock Eastern, for example, the volume is not really going to back up your play. So let's say your key level breakout occurs at 1 o'clock, so hours into the market, you might only get like a 20-cent break, versus if it happens the first 15-30 minutes, you might get a $2, $3, $4 break. So the profit potential closer to open tends to be higher just because the volume backs up your play a lot of the times. So volume is a very important indicator to watch. No matter what your style of trading is, it is important to know, whether there's high volume or low volume. And so going on to the next thing that I look at is futures. So it's not really an indicator, but it's something that helps me indicate what my stock is going to do. So in that way, you can probably call it an indicator. So right now on my screen, you can see I have NVIDIA open on the top, and then on the bottom I have NQ, which is the NASDAQ futures, and then I also have ES, which is the S&P 500 futures. The reason I watch these futures is because NVIDIA is listed under both of these indexes. So when the index has a certain move in one direction, a lot of times it's going to bring a lot of those stocks with it. So since NVIDIA is listed on both, when futures have a move down like this, it'll hold back NVIDIA from having an upside move. There are times where your stock might diverge from futures a little bit, and that's important to know. But it is very important to see what futures are doing at the time, so you can have a more educated opinion or read of what your stock is going to do. So if your stock is stronger than futures and futures is just consolidating all day, if futures has a move up, breaking that consolidation, you can expect your stock to be one of the first ones to continue that movement up, since your stock was already stronger while futures weren't doing anything. Vice versa on the downside, if your stock is weak, futures are strong. If futures turn around, you can expect your stock to dip down a little harder as well. So futures are pretty important to watch. I'll just give you a quick visualization of what the basket of stocks looks like. So this right here is the NASDAQ. So on my screen here, that's the NQ chart. You can also use QQQ. They move pretty much exactly the same. It's just trading at different numbers. And for ES, you can use SPY, so SPY. Same thing. They move pretty much exactly the same. It's just trading at different numbers. So whatever works for you. But I definitely recommend, as a scalper, to be watching how futures is correlating with your stock. So you can see on this move down, all red candles. Now NQ has one green candle, Nvidia has a green candle. So Nvidia is a little bit stronger because you can see that the move down wasn't as aggressive as this, but it's just something, in my opinion, that's important to know. So you can see this candle struggling and futures are dropping. So that's a first-hand example of why futures are pretty important to watch when trading scalping stocks. And then this is the S&P. So the S&P has more stocks in it, but now the highly weighted stocks you can expect to move closer to futures. So Google, Apple, Microsoft, Amazon, Nvidia, you can expect that they're going to move closely to futures, but there are going to be the few times where they diverge. Let's say Apple has news, really bullish news, it might diverge a little bit. However, your expectation should be, if futures have an aggressive drop, it's going to pull down Apple with it, it's going to pull down Microsoft with it, and things like that. So that is how I use futures. The next thing I have on my screen is level 2. So basically what level 2 is, it shows you the open order book of whatever stock you have it set to. So for Nvidia to move up, these ask orders have to get filled, and for Nvidia to move down, these bid orders have to get filled. So when you're looking at a key level breakout, just for example, let's say 431. I mean, it already broke, but just as an example. So let's say 431 is your key level. You might see a big wall at 431. So the ask size, you can see how it's very small throughout. If this is a big key level that's been holding for a while, you have multiple rejections, something like that, you might see a 10,000 ask size, a 20,000, 100,000, really depending on the stock and depending on the setup. But that's a big wall, and you can only identify those walls on level 2 because it shows you where all the orders are set. So for us to push up or go down, those orders have to get filled. Another thing I use level 2 for is to see, it helps me read momentum, is seeing the incremental changes into your key level. So for example, a stock could be moving in 10-cent increments, but then when momentum starts truly picking up, it might move from 10 cents increments. So for example, 430 and 10 cents up to 430 20 cents, 430 30 cents. It could start moving from 10 cents to 20-cent increments. So 430 and 30 cents to 430 50 cents, 70, and then that momentum can keep picking up. So it can go 50 cents, a dollar increment jumps are pretty big, but every stock is going to be different. So Apple is going to move differently than Nvidia, which is different than Netflix. So but regardless of the stock, you're going to be able to see the incremental jumps on the bid and the ask. It just takes a little bit of time to get used to. Now another thing that I look at as an indicator to help me gauge whether the stock is strong or weak is time and sales. So basically what time and sales is it shows you the most recent orders that are happening and the size of those orders. So the price and then the size. So like level 2 shows you, for us to move up, these orders have to get filled. Time and sales shows you the orders that are getting filled right now. So this is more like a future thing. So like for us to move, these have to get filled in the future. This shows you what's happening right now. So if I'm looking at a breakout to the upside, I want to see basically this speeding up. So a lot of orders happening rapidly. I want to see big size and a lot of green flashing on the screen, which means heavy market buy orders. So when you have a lot of those orders happening with big size, it'll give you extra conviction in that upside play. So time and sales is another thing that I would recommend looking at. Something that's available for Stock Hours members is the algo, which it's not really an indicator, it's more like a technical analysis kind of thing. But it basically just helps you draw supports and resistances. So for example, this red dotted line is a support that it just drew out, and this trend line, or these two trend lines actually, are just drawn from the Stock Hours algo. So that's something you guys can use. I wouldn't trade necessarily just off of that, but when you have multiple things lining up, then you can have more conviction in that trade. So for example, we had a resistance here, kind of wicked right there, and then we broke out a little bit. But since there's low volume during these hours, so you can see volume at open versus volume here, there's not really the best continuation. So that's another thing to look at. And the very last thing that I have on my screen that I might make a decision on, which is like the least important thing, is my P&L. So you can see on the bottom of my screen here, I have my P&L percentage, and then my P&L open. When I'm in a position, these are fluctuating, but I'm not in anything right now. P&L on the day, that doesn't really matter. But basically, when you're up or down, whatever percentage, you'll be able to tell here, and then it'll show you how much a dollar amount you're up or down. I don't like to trade based off my P&L. However, it is good to know in some scenarios. So if you're up, whatever percent, and then you see your stock is starting to have bad price action, you can look to scale out or look to sell, and same thing on the downside. But I wouldn't really look to trade more off that. Basically, the main things I trade off of are price action, and then how all of these different indicators are reacting at your key levels. I don't really recommend as a scalper to be using RSI, MACD, stochastic, things like that. It'll just be too much on your head, and it'll probably cloud your judgment. So the less you have on your screen, the more you're able to focus on the price action, and that should be your number one focus as a trader, period. Not trading, RSI is overbought, so let me just buy puts, because it probably won't work out for you. But hopefully this video is helpful for you guys. If you have any questions, leave it in the comments below, or join Stock Hours, DM any of the interns, managers. We are happy to help you guys. But that's all for me. Peace.